In this video, we're going to talk about Camber Energy Inc., trading under the ticker symbol CEI. Recently, Camber Energy has been the center of a lot of hope, expectations, and speculations. And for a period of time, retail investors even succeeded forcing the hands of short sellers. However, the price recently crashed by more than 60%, partially because of a short report that a company called Kerrisdale released. We're going to talk about the company that released the short report and also comment on whether Camber can rebound from here onwards. Before today's video begins, if you like my content, please like, comment, and subscribe to my channel for more analysis videos. Kerrisdale Capital, or also called Kerrisdale Advisors, is a hedge fund based in New York that brands itself as a research-oriented investment firm. From their SEC filings, this company seems to have existed for a while now. So the first filing that I can trace of dates back to 2013, and according to their own website, the firm has been around since 2009. Something that is relatively special about Kerrisdale is that they only have 7 clients, and 4 of them are related people to the company. In other words, Kerrisdale was set up almost as a family office for a few individual or institutions, because all 7 of them were able to raise more than $1 billion of cash. When I looked at the social media presence of the company, something really struck me in the presentation. This hedge fund that released a short report about Camber Energy and likely shorted its stock doesn't seem to be as professional as a hedge fund would normally be. In fact, I almost have the feeling that its wording and language target the retail traders like you and me. The firm's senior management feels like what I would be calling an activist investment vehicle, meaning they want to trigger stock price movements and hopefully increase their influence in a company and to take profit from it. The short report itself depicted a very bad outlook for Camber Energy, as it recently fired its auditor, didn't file to SEC in time, and is using a fictional technology to keep wooing investors. Alright, so first of all, Camber Energy did file its documents to SEC. It may be a little bit late, but we can't say that it didn't happen. So in this regard, this accusation no longer holds that much weight. Regarding the change of auditor and, the attempts to use a technology to bring in more shareholders, I believe that there are at least other explanations to them that should bring a different interpretation. Essentially, a company can hire and change its auditor at any point in time. When looking at their annual financial results, it seems like Camber Energy has been using a different auditor for every year or so. This can be explained in many different ways. For example, it may be difficult to audit a public company. It can also be explained by maybe the fees that different audit firms are charging, and other discretionary reasons. The key point to note here is that unless there is a disclaimer of opinion, the auditor change shouldn't matter that much. Essentially, audit firms would have to evaluate whether they can take the client on, and they have an obligation almost to resign if there are pressures coming from the company. There is no such disclosure, so we should assume that there is no problem when they audited Camber Energy. Regarding the technology, I think that this really comes down to a personal opinion about what is tangible and what is not. So on one hand, it's not really something that matters that much when it comes to why people are buying the stock, right? We're here for the short squeeze. We're not really here to necessarily bet on the long term, which we will come back to later. If the technology isn't as valuable as we think it is, normally, even then, it's not something that is considered as a major cause for shorting a company. I mean, most growth stocks have some kind of proprietary technology that, to be honest, no one really knows about or cares about as long as the stock price keeps going up. Long story short, I think that the short report released by Kerrisdale doesn't really hold that much weight. They have to do it in order to start a short position on the stock, but it doesn't mean that they truly believe in the report itself. I think that this is a short selling situation because the stock is having difficulties, and my recommendation is to either hold it for now or start buying at this price level. The recommended exposure is below 1% for Camber Energy because, let's be honest, it is still a relatively risky position to have. But my assumption is that at some point the short selling needs to have more substantial reasons to keep the position on. Otherwise, it's a matter of time before they will have to recover. Looking at the current environment, I think that we have to be careful about having exposure on the equity market to begin with. The market has been predicted to eventually go through major pullbacks or recession for more than a decade at this point, after the quantitative easing years and the drastic increase in asset price and the corresponding decrease in their yields. We have to remember that the market isn't a mirror on how the economy is doing, because otherwise the market would have been trading sideways for all that time. And then 2020 saw another big push in the asset prices, and this time not just for the blue chips, but also the growth stocks. There are generally two explanations. The first one is that more money has been printed across the world, and because the real economy has been stagnating over the years. The capital then entered the huge melting pot of globalized finance and has been buying up shares or assets ever since. That was the case for quite a while, but right now, quantitative easing has ended in North America for the most part, and in Europe, they are considering of either wrapping up their existing quantitative easing or slowing it down. In other words, this will not be necessarily a very important factor to keep pushing stock prices up for the years to come, but it is partially compensated by the geopolitical tensions across the world, and more tensions there are, the more capital there tends to be to flow to North America, because it is still perceived as a safe haven for capital of different countries, especially those that are currently having turmoils or social unrests. What this means for the market is that the degree of uncertainty will increase over the next couple of years or months, especially as the expectation for a recession is building up after the party in 2020. And the recent announcements from US Federal Reserve about the possibility of a recession coming down the pipeline didn't help. So overall, these are the reasons why I think that, generally speaking, not just about Camber Energy, you should keep a lid on the exposure of equities in your portfolio. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.